Okay, Assalamualaikum and welcome back. In this session, we are going to learn on how to prepare the financial statement for a company called Warnish Berhad, and this is a question from July 2021 FAR270. This is set 2. So this company engaged itself in selling of electrical appliances, and maybe they purchase the electrical appliances and they sell it, right? And the financial year end on 31st of December each year. This is the year end for this year, 31st of December 2020. And the authorization of the financial statement was on 1st of April 2021, authorized for issue. So let's do the classification of the financial statement according to the item first. Okay, let's do that here. Ordinary share capital that will be classified under equity. Right, this one is equity. I want you to do that first. This is non-current liability. These items are all items of non-current asset, right? Fixed deposit, if you are not stated, you assume this is more than a year. If it is stated, normally that is less than a year, that would be current asset. But here, no information. Our assumption is it is a non-current asset. Inventories, trade receivable, and bank together with the allowance, these are all current asset, right? And you have the item on revenue. This is income. And this cost of sale, expenses, all these are expenses. This one is an income for the item interest on fixed deposit. Finance expenses are actually finance costs. Interest on fixed deposit would be under investment income. Okay, trade payable, current liabilities, and tax paid would be considered to decide whether there is a tax recoverable or tax payable, and that was an expense. Okay, that was the item. You can see that the property, plant, and equipment information given to you is at the carrying amount. So this one is at the carrying amount, this figure. And this was the carrying amount as at 1st of January 2020. That was from the last year's movement. So the movement of what happened before 1st of January 2020 was given here in information number 3, where these are the transactions that happened last year, which is actually beginning of the year here would be 1st of January 2020. But that was carried forward, and this one is brought forward. Right, so these are the items that you have to show what is the breakdown of the carrying amount of the PPE earlier. It was actually consists of land, building, and furniture. And these are the costs of that item respectively, and valuation at the end of last year, beginning of this year. And the accumulated depreciation, the one given here is for building and for your item furniture. And there are no depreciation for land because non-depreciable asset. And for the item land and building, it is using revaluation model. So we shall read the question later, but I'm just telling you that land and building uses revaluation model. Furniture uses the cost model for the subsequent measurement. Let us look at the first one, which is the first thing that we'll do is to do the adjusting journal entry. I'm doing it for number 1. And this is about a customer which is declared bankrupt on 7th of March. This is before the authorization date, after the reporting date. Do look at the date here. And that would be an adjusting event, as the provision or allowance for impairment of trade receivable has been done by the company. So meaning that you are going to write off the bad debts which relates to the customer that was now certainly uncollectible to the allowance. So you will do this, debit the allowance for impairment of trade receivable, and you will credit the trade receivable with the amount 25,000, and this would be adjusted later in your SOFP under your current asset. Make sure you do that. Number two is about sales that you have recorded the sales worth 1.5 million. However, it was only delivered on 15th of January. So meaning that the performance obligation is not satisfied since it was delivered after the reporting date. So this is not the sales for the year. It should be the sales for the next accounting period, 2021, but somehow it has been recorded as the credit sale for this year. So this is a revenue error because you have recorded revenue that shouldn't have been recognized. So what you need to do is you have to go and adjust that. How do you adjust? You are going to remove from the revenue, debit revenue, and that is in SOPL, right? And you will credit your account receivable because this is credit sale, so that has to be credited and shown the adjustment in the SOFP with how much, 1.5 million, 1.5 million. However, in the closing inventory, you don't have to go and make adjustment because that amount was still included, unless the question mentioned that the amount was excluded in the closing or inventory, then you do adjustment to the closing inventory. Are you following me, class? Hello?
Yes.
Thank you. So, okay. So don't have to adjust the inventory. You just need to adjust the revenue and the account receivable. Now we go to number 3. For number 3, there are a few items. Number 3. So I am going to label that as A, B, and C. This is A, this is B, and this is C. So I'll start off with A, which is the revaluation of the item. What was the item? Land. So I have mentioned to you earlier that the revaluation of land, just now there was a land and I mentioned it was revalued, right? So the revaluation of land, it has a deficit of 375. This is in the current year. So that was for land. So for that part, you are going to record the revaluation. How? That was first revaluation. So I put here first revaluation or initial revaluation. This is non-depreciable asset. So you will debit revaluation deficit. How much? It will be 375, and this will appear where in your SOPL under admin expenses, and you will credit your land, the freehold land or land whatsoever land that was being revalued, 375, as the deficit was given. So that is the one that you will also show in your notes on PPE. Next item is about the building. Yeah, now we go to building. Okay, building has a useful life of 60 years. It was depreciated on straight line basis. It was revalued to 11.2. So when it was revalued to 11.2, you know that right, yeah, you know that the fair value is 11.2 million, and you need to find out what is the carrying value on 1st of January 20. Why 1st of January 20? Because the revaluation is on this date, 1st of January 20. So you need to find out the carrying value on 1st of January 20 because the fair value given to you was also on 1st of January 20. Your target is to find the surplus or deficit. So to do that, you need to find what is the carrying value on that date. To find that, it is actually very direct in this question since it is given. So here you have the carrying value of the land. carrying value of the building as at 31st of December 2019. You want to know 1st of January 2020. So this is also the one as at 1st of January 20. So it was 9.45 million. So it was directly given since the revaluation took place at the beginning of the current year. So here you will have a revaluation surplus. How much is that? Can you calculate that for me? How much? Yes, class? How much is the revaluation for your item building? Hello, class? Am I with you, class? Hello? Hello?
Okay,
What is the figure for revaluation surplus?
1750000.
Okay, 1.75 million, right? Good. I
Right.
think that was the internet problem that you guys cannot respond. So 1.75. So this is again initial or first revaluation. How do I know it was first revaluation? Since in the trial balance, there are no information on revaluation surplus or revaluation reserve balance. You can check and you see that there is none. So therefore, both are first revaluation. Only that this one is a deficit, but this one is a surplus. So for the journal entry, for the revaluation surplus, you will debit building and you will credit the ARR, which is your ARR for building. Do not go and mix it up. So 1.75 million, 1.75 million. Is that the only thing that you need to do? No. You also need to do another adjustment. I'm going to use another color, different ink to differentiate that. I put green, another green here. So the another adjustment that you need to do is I put it here, number 2. This is number 1. Number 2 is that you are going to adjust by eliminating the accumulated depreciation. So you need to go and eliminate the accumulated depreciation of the asset before revaluation. So what is the accumulated depreciation of the asset before revaluation? This one, 1050 of the building. So if you eliminate, you will debit accumulated depreciation of building and you will credit, sorry about that, screen going up and down, credit the building itself. Building. How much? 105 million. 105 million. And starting from 1st of January 2020 until 31st of December 2020, your current year depreciation must also be adjusted. Current depreciation. And starting from there onwards, your depreciation will be based on this revalued amount, which is 11.2, the revalued amount. So you are going to calculate the current year depreciation and make adjustments. So I am going to put it here. Current depreciation. So it would be, how do you calculate? You are going to take 11.2 and here you are given the remaining useful life. Can you see here, remaining useful life? As at 1st of January 2020, it was 56. So divided by 56 times 1. What do you get? 11.2 divided by 56 times 1. I think you will get 0.2 million. Do you get that? 200,000? Class? Hello, class? Do you get?
Dapat medium.
Yes, very good. So you are going to debit the depreciation, credit the accumulated depreciation for building. How much? With the figure 0.2 million, which is your new depreciation based on the revalued amount divided by the remaining useful life, 56 years. Depreciation for furniture, you are informed using reducing balance method. And to double confirm what I just told you earlier, the revaluation model was adopted for the building, and revaluation model here was used to measure land and building. And on top of that, you are also informed the information regarding the item depreciation for furniture, which is using reducing balance method. So furniture was valued using cost model. So for the furniture, your calculation for depreciation would be, you are going to take the based on carrying amount. Why carrying amount? Because the item furniture is using the reducing balance method. How do I know here? Reducing balance method. So it would be for you to calculate based on carrying amount. Carrying amount is cost minus accumulated depreciation. So we'll do this in working. We will do that in workings. But the journal entry will be to debit depreciation furniture, credit accumulated depreciation furniture. But you need to find out how much. We'll do that in the working. So number C is just the information telling you that no adjustment for all transaction on PPE has yet been made. No adjustment has been made. So number 4. Number 4 is MFRS 137, which is on provision, contingent asset and contingent liabilities. In the current year, July 2020, you receive a summon from Mac Bank. Mac Bank, this summon is showing there is a present obligation check. That was a legal obligation because of the breach in contract. The bank demanded a payment of 173, and it was confirmed by your lawyer that the company is guilty for the breach of contract. So the outflow is probable, and the reliable estimate has been also confirmed. So meaning to say that the criteria for provision has been fulfilled. 1, 2, 3. So therefore this is a provision. So you will have to debit the damage that were being asked, or the compensation expense, and credit the provision for damage. How much? With the figure 173. Okay, that was to be shown under. This one will be under where? Other operating expenses in your SOPL. Next, we do for number 5. Number 5 is capital commitment. Capital commitment means you enter the contract on 15th of March. Only a contract is being signed, or maybe a sale and purchase agreement was being agreed upon to purchase the land. But there has not been any purchase of land yet. And this is just an information about the future capital expansion, future capital expenditure of the company. So this one will be shown by way of notes only. You're going to show that in the notes. Number 6. Number 6 is an error that happened in the current period. This is the current period error, which was discovered on 12th of October. And that error involved what? It involved the payment to trade payable that was wrongly recorded in admin expense. So the error is that you have debited the admin expense and you credited the bank account, right? Bank account is correct. So what happened is that you debit your admin, you credit your bank. This is right, this is wrong. How much the amount is correct? 164, 164. Correct, correct. So what was wrong is just this part. So to correct them, you will go and credit the admin expense, remove the error. How much? 164. And you will have to debit that to the correct account, which is the trade payable. So remove it from trade payable because the payment is for the trade payable. So I put here trade payable. 164. So make sure you adjust this in the SOPL under current liabilities Make sure you adjust this in your SOPL under your admin expense. Remove it. This one also remove. Minus. Last one is on, second last, sorry, is at the NRV. So NRV was 29.5. NRV of the inventories. You have to compare that with the inventories that were given here. So this is the inventories at cost. So if you compare 35 million, take your calculator and calculate that for me. 35 million minus 29.5. 35 million minus 29.5. Wait, yeah. What's wrong with this? Okay. It's getting smaller. I apologize for that. Okay. What was the figure just now? I forgot the amount now. It was 35 million. Can you calculate how much is the difference between 35 million? Take that, 35 million and 29.5. How much is the difference between these two? 1, 2. And this is your cost. How much is that?
5.5 million.
5.5. Thank you. 5.5 million. This is the write down that you need to do to write down debit cost of sale credit inventory. With how much? 5.5 million. Do go and adjust that in the SOPL and also in the statement of financial position under your current asset. Last item is the tax expense. You are informed the tax to be confirmed at 4375 tax expense. Go and find out what is your tax paid. So if you check your trial balance, the tax paid was given here 5.5. You have overpaid the tax by how much? So you can see that tax paid was 5.5. Tax expense was 4.375. So the difference is how much? That is tax recoverable. How much is the tax recoverable? Can you calculate 4.375 minus or compare with 5.5? What is the answer? 5.5 million minus 4.375. What is the answer, class? Hello?
1.125 million.
1.125 million. Who is that?
Amira.
Thank you, Amira. 1.125 million. So the tax expense will be debited to the SOPL. The tax recoverable will be shown in your SOFP under your current asset. Okay, done with that. We can now prepare the statement of profit or loss. I have done the preparation here. So the first item is to show the revenue. The revenue should be, I'm following the template that I have already prepared. The revenue is going to be 325764 because you have removed the overstated revenue that was an error, right? Meaning that the revenue here is the error for the overstated revenue that you have removed that item. Okay. The next one is to for your cost of sale. The item cost of sale should be 185,500. Write down of inventories is being added. The next one is I focus on the admin expenses first. So admin expenses, your figure and selling should be, these two should be this amount that I show, and this is the working here. Let us look at the working for admin first. Admin. For the selling, no workings. It was just directly from the trial balance for the selling. Okay. So here I'm starting off with the expenses. I've taken the revenue. I've taken the cost of sale. Now I'm taking the admin expenses. I will add my director salaries, and I'm telling you that the selling does not change. The expenses is still the same, right? So let's look at the item back. Okay. So first, the try balance shows the admin expenses was 65.5, and there was an error, admin expenses that was being overstated because the payment to the trade payable was wrongly charged to the admin expense. So you have to remove that. The next one is you record the director's salary, and also the adjustment regarding revaluation deficit on land. That was 375. That is part of the admin expense. And you also need to record the depreciation for the building. 200,000 we have calculated. Depreciation for the furniture. This is based on cost minus the accumulated depreciation. And that was actually the one here. Cost minus accumulated depreciation. Easy way to do it is by taking straight away 3673,450, because this is the accumulated depreciation and this is the cost, and you are given already the carrying amount as at the beginning of the year, 3673,450. You don't have to calculate that because carrying amount was given. So you just take that carrying amount, which is 3673,450 times 10%. So you have 367345, and that was the total for your admin expenses, 66,628,345, the one here. The selling and distribution does not change. It is the same. And the one that you have here is other operating expense. Other operating expense here would be the provision that you earlier calculated, the provision, right? Let me just put the border. Okay. Next, your profit from operation would be, let's look at the profit from operation. Okay. Wait, just hang on. Okay, this is what I'm doing. Right. Okay, let's look at the other operating expense here. The other operating expense is the one that I mentioned, provision, which is the damage or compensation, 173. And your investment income would be coming from the interest on fixed deposit. Interest income on fixed deposit, 317. Where do we get that 317? It is here. You have the income from fixed deposit, this one, 317. And this is already now included, all this included, right? Next, we go on with our next item, profit from operation. We are done with that. Other operating expense, we are done. So I'm going to reveal it here. Right. Your profit before tax is 44,859,655. Your income tax for the year would be what given in the last additional information. And your profit for the year is what you have calculated from profit before tax deducted with the income tax. Other comprehensive income comes from the revaluation of the building. Revaluation of the building, which is the difference between fair value and carrying amount. We have just done the calculation, and this is your total profit or loss and other comprehensive income, 42,343,234,655. Are you with me, class? I'm showing you this part. If you have any question, please ask. Is there any question?
So
Hello?
far tak ada dia.
Tak ada ya? Okay. Wait. I need to go and put a different color. That will make things easy. Okay, the workings are all here. Now let's go and do the last item, which is the item on your statement of changes in equity. Statement of changes in equity. Let's look at that item, statement of changes in equity. So you have the first item, which is the how many columns? 1, 2, 3, and the balance at the beginning. Where do you get the balance? This is from the try balance, the balance for the um, share capital. ARR, no balance. Retained earning, there is a balance given here. This one, right? That two item. Now the revaluation surplus. You have the revaluation surplus, and you have the profit for the year. Profit for the year. Okay, the profit for the year would be how much? 40,484,645. Next is the item. Okay, I'm removing it down. Next is the item. What is the total at the end of the year? The total at the end of the year would be this total. No changes to the ordinary share capital. No changes. The total from retained earnings and the total from asset revaluation reserve will now be transferred where to the statement of financial position. Before that, we start off with that part. Yeah, before we start with others, I start off with that because that was direct, so I am taking that directly. So I take from where? From here, 258, and these two will come back to 149,577,105. The working is also here. Now we go on looking at the PPE. With the working will be provided later. I'll provide that later. But the fixed deposit does not change. The the investment property does not change. It's still the same thing. What changes is the one here. I want you to focus on the item on current asset. Inventories, it was changed due to write down. This is the write down. Write down. Okay. The inventory, the figure here should be 32,475. Yeah, the item here. And your cash at bank would be, your inventory, sorry, would be 29.5 million, sorry. 32,475 is your trade receivable. Your allowance for impairment would be 925. You can check the workings that I provide here. Bad debts, 25. Revenue error just now, 1.5. Allowance for impairment was reduced with the bad debt. So you have 925. So the total net realizable value of the trade receivable is 31,550. Tax recoverable 1125. Cash at bank, there is no change to the cash at bank, no purchase, no disposal whatsoever. So cash at bank remains the same. Right. Next is to look at the total. You get the total there. Now we go to the non-current liability section. So these are the items that will have to be included. One is the long-term loan. No changes to the long-term loan. The changes is in the current liability section. Trade payable has now been adjusted with 164,000 because of the trade payable payment that you made, but no record has been made correctly. So you have corrected the error, so that becomes this figure. Provision for damage or for compensation was 173. That was from the last few adjustments that we have done. Next is the notes on PPE. We are coming close to the end of the preparation, so I'm showing you the notes on PPE. This one is the one that you take where from? You take from here. here, this figure, cost, this three figure, 25, 10.5, 5.2, and the figure here, which is 1.05 and 15625 will be the one here. Yeah, you transfer it to your beginning amount for your current year notes on PPE. 1st January 2020 comes from last year 31st December 2019. Okay, what was the changes during the year that you have to show? One is the surplus on revaluation for building, deficit on revaluation for land, and also the elimination of accumulated depreciation that you have done for building. For furniture, no adjustment needed in the cost and valuation section, right? Next is the accumulated depreciation. Beginning of the year, yes, that was taken from last year balance 31st of December 2019. Depreciation charge for the year, this is the one that we calculated in our workings just now. Elimination of accumulated depreciation, that was where we debit accumulated depreciation, we credit our building for the revaluation that has been done because the amount was restated to the fair value, and as at the end of the year you have this figure, right? So the carrying amount would be the cost minus accumulated depreciation. The carrying amount as at 30th of June 2020, the carrying amount would be the figure that you can see there, and the total amount would be 38,931,105. This is the one that you will show here. Okay, now last one is your capital commitment. Just take the one that you have here in this additional information on number 5, copy this, and the sentence are put as capital commitment. That's it. I finished with the workout for our question July 2021 set 2 Warnish Berhad. I will stop the recording, right? I will stop the recording now.